How many of you believe the American system of government is corrupt? How many of you believe that money buys influence? If you say yes, you agree with most Americans. 72% of Americans, according to a 2018 Pew Research poll, basically said that people who give a lot of money to elected officials have more political influence than other people. If you say no, you may be a minority, but you're likely in line with public views of numerous DC insiders. So you're keeping very good company. Now, to help answer this question of if money buys influence, a lot of people often talk about Supreme Court cases, such as Citizens United. Citizens United is the case where the Supreme Court ruled that corporations can spend unlimited sums of money in elections in independent expenditures. What this means is that while corporations cannot directly contribute to campaigns, such as give $1,000 to Joe Schmo for Congress, this has been the case since the 1907 Tillman Act, by the way, corporations can spend an infinite amount of money to help elect a candidate without directly or officially coordinating with that campaign. What this means is that they can spend however much money they want on ads saying to elect Joe Schmo without planning or working with Joe Schmo's campaign about the ad. It's a wink and a nod type of situation. Unlike a lot of people, to help answer this question, I want to go back to the year 1905 and discuss the story of life insurance, lavish parties, rich people infighting, and corruption. You might ask, why am I telling this story? But I think it helps answer the question how and if money buys influence. So, in the late 19th century and beginning of the 20th century, many Americans were distrustful and held negative opinions of big monopoly powers and new industrial giants, such as the big oil companies and the railroad companies. Up to 1904, one of the most successful industries was actually life insurance, especially since the Civil War. The three big companies were Equitable Life, Mutual Life, and New York Life. And these big three companies took in more money than the federal government in revenue. Now, at the time, recall the government was much smaller than it is today, but it's still a lot to have three companies take in more revenue than the entire federal government. And one president of these companies called life insurance a great beneficent missionary institution. And if you want to throw up in your minds after that, do know that many Americans at the time held a similar view, seeing life insurance as an honest, beneficial business. However, they would soon change their minds. So, one of the big three, Equitable Life, the founder was Henry Hyde, and his son, James Hyde, was a stereotypical spoiled rich child. His father died in 1899, giving him majority stock ownership and effective control of the company. He was scheduled under his late father's wishes to become company president in 1906, and he publicly spent his riches hosting races with four-in-hand carriages and holding lavish parties. Now you might ask yourself, what is a four-in-hand carriage race? And this is literally a gathering of rich people racing in carriages where they each have to control four horses at the same time to push their carriages. Now, the other executives of Equitable Life saw this spoiled child and said they do not appreciate this behavior. They did not appreciate Hyde's behavior, and they did not want him to be president purely based on nepotism. They feared for the future of the company of Equitable Life. Now, the sitting president that James Hyde was supposed to oust was a man named James Alexander, and him and other executives sought to kick Hyde out of the company by exposing his personal misdeeds. Alexander and his friends went to the other board members of the company with claims that Hyde funded his misdeeds with company money. One particular party that they highlighted was in early 1905 and cost $200,000. That's $200,000 in 1905 money, which actually means over $6 million today. The board of the company, however, was split between supporting Alexander and supporting James Hyde, and unfortunately for everyone, they sought to fight their battle over ownership of the company in the press. The public trust in life insurance tanked, as you might expect, with this battle in the press. Different sides accused each other of excessive salaries and expenses, insider trading, giving loans to their friends, and other moral misdeeds that burned the public image of a benevolent institution to the ground. Unfortunately for the life insurance company, the public drama also drew the attention of the New York government, which began an investigation into life insurance company executives, and not just Equitable Life, the other big three companies. And so this investigation proved a lot of juicy details about each of the big three life insurance companies' misused company funds. It exposed self dealing, insider trading, price fixing, accounting malpractice, corporate funding of personal interest, rampant nepotism, lobbying, and bribery, among a few other things. Now, you might be asking yourself, what does this have to do with money and politics and buying influence? But you see, this investigation did not just find company malpractice, it found evidence of political corruption. The life insurance companies kept secret, unreported bank accounts that they would use to contribute to political candidates and parties, namely the Republican Party. And these corporate contributions had been known to have occurred based on hearsay evidence in the public, but the investigation got various corporate officials to admit these realities on the record. The corporate executives of the life insurance companies were extremely honest on the record, admitting multiple realities about contributions. They said that they gave money to ensure that certain policies were not implemented and that candidates, particularly from the Democratic Party, were not elected. They wanted to control who was in power and what policies got implemented. Most revealing, however, was the testimony of sitting members of Congress, specifically one man, U.S. Senator from New York, T.C. Platt. And he was asked, on the record, in testimony, if there was any quid pro quo attached to campaign contributions from these companies. Quid pro quo meaning, I give you $1,000, you do this exact favor for me. It's very specific. I give you this, you give me that. Now, T.C. Platt said no, but when asked the question in a different way, when he was asked if, and I quote, the use of these contributions in the election of candidates to office puts the candidates under more or less a moral obligation not to attack the interests supporting, Platt replied, that is what would naturally be involved. That is what would naturally be involved. Now, the life insurance scandal itself and other events at the time led to the 1907 Tillman Act that I referenced before, which banned corporations from directly giving campaign contributions. However, the scandal revealed much about the nature of campaign contributions and political spending in relation to the original question of does money buy influence? While direct bribes have occurred, they are publicly embarrassing and inefficient ways to receive political favors. T.C. Platt said there wasn't quid pro quo corruption. But by admission from giving corporate executives and receiving politicians, money does act as investments. It buys access and influence to politicians who support their financial backers. These backers prop up people to get into office in the first place and then reap reward on their investments once they're in office. And the corrupt influence of money, according to Platt, is natural. If an elected official is financially backed by affluent interests, then it is only natural that there is some form of undue influence. This is not a case of bad and good apples, a few bad and good individuals. If concentrated sources of wealth are allowed to spend massive sums of money to bolster candidates, corruption and disproportionate influence will naturally occur. That is the nature of money in politics. It naturally buys influence.